Assalamu alaikum everyone. So today I am going to discuss top 5 stock picks of mine which I have invested in for January 25, and this will be my own research. It is not an investment advice to be honest, but there is a way to pick up stocks. So this is an educational video to show you how to do that, how I do that. So let's start, but one thing to keep in mind is this is a risky portfolio because I want to take a bigger risk. That's why. So my stock allocation was 20% into the large cap, 50% into mid cap, and 30% into small cap. You can reframe it as you want, but this was my allocation. So let's start. First, I will discuss through the stock picking up, how I did it. Then I'm going to tell you the top 5 stocks from the 3 sectors that I have discussed. So without wasting any time, let's go to the laptop screen to discuss.
So this is the sheet that I have made, and I have used Mufassa Halal Stock Screener to screen the stocks. Now to tell you how I choose what stock to invest in. So this is a screener, screener.in. We go to screener.in and we create some screens over here. There are some ratios and everything. So you can create your own screen. And when you create here your own screen, like for example, you can use this as a query. If I use this as a query, and if here I screen here, if I create a screen like this, so it will show you the stocks like that. So this is how we do that. But here how I had done, I have already shortlisted these stocks from my stock checklist, and the final stocks that I have selected I will show you at the end. Okay, now let's go by one. So from the large cap I have selected Ambuja Cement. Okay, now you may question why you are selecting Ambuja Cement. So see, one thing is the infrastructure sector is growing in India as of now. And one more criteria is you want the stock to be near its 200 days DMA. This is not a good thing for Ambuja Cement, by the way. But what is this 200 DMA? So DMA means daily moving average. So DMA means daily moving average. So this is a metric that you use if the stock is near its 200-day DMA, so it is a good stock, but it is much below. So by this criteria it is not a good stock. But we are not doing trading over here, we are doing investing. So if you see, then PE of Ambuja Cement is far less than Ultratech Cement, which is its competitor, and it is also less than the industry PE. You can see the Ambuja Cement is a large cap pick for this. Current price of Ambuja is almost 510, and the 200-day EMA is 572. So basically it has a minus 10% change, but the intrinsic value coming out from the internet I checked is 436. So this is undervalued. This is not a overvalued stock, it is undervalued by 16%. Target price people are telling as 687, and the upside potential that this stock is having as per the target price is 687. So this was the reason I picked up this. Upper circuit is 560. But one important thing that you need to keep in mind is Ambuja Cement is owned by Adani right now. So if Adani Group as a whole is owning Ambuja Cement, so whatever projects Adani Group is moving here or going to have will all be from Ambuja Cement. And in infrastructure sector, Adani Group is mostly into infrastructure sector. So this will surely benefit Ambuja Cement. And what else you can see is the profit has grown and lot of things over here. So Ambuja Cement was the large cap pick. Now moving on to the mid cap pick. Mid cap, I allotted almost 50% of the capital into the mid cap. Now let's see how I used that. So first thing is domes. Why I choose domes to invest in. So let's see what is the right now, what is the scenario of domes industries. See, domes is, you all know what domes does. Like it makes stationary equipment. So it was incorporated in 2006. But the personal reason for picking up domes is like I like the product of domes, and in my company as well people are using domes. So that is a positive thing. If you like the product, that is the one of the most important thing. Now here you can see the daily moving average, it is very near to the daily moving average 200 days. So it is a very good sign for this, because we want to pick stocks like this. And if we check the P, so you can see the median P does not make any sense because it was zero before some time. But this criteria is very good here. So promoter holding has decreased, that is a bad side of this. But company has a dividend payout. We don't focus on dividend payout much. If you see the quarterly result of Domes Industries, so the sales has increased, expenses has also increased, but the operating profit of the company is continuously increasing. So this is a very good thing. It is a halal stock to invest. So that's why the mid cap pick number one was Domes Industries. And if you see what was the second mid cap pick, so it was ZF Commercial Vehicles. So let's go to ZF Commercial Vehicles. See, this ZF Commercial Vehicle Control you can see in our sheet. It is a mid cap stock, current price having 10,785, and it's far less than its 200 days moving average. See, but the reason for picking up this was the commercial vehicle industry. This is a equipment manufacturer company. Like it it manufactures braking product and other systems for trucks and buses. And if you see, the vehicle segment is increasing in India, so it's a good thing for this company, and it has dropped a lot from its upper circuit. You can see the upper circuit of this stock was somewhat near 16,000. So sorry, it was target price, but upper circuit was 13,000 almost, and it is at 10,000. One thing. Second thing is intrinsic value is not that much, but still it is somewhat overvalued. But the target price is assuming up to 16,000. It's a risky investment, by the way. But now from small cap is one of the like best segment to invest as of now in these two companies, because see, the first pick is Ethos. Now what Ethos does is, let's see, Ethos is into the luxury segment. They sell luxury watches and all. See, this is below the 200 days moving average, but the problem over here is most of the stocks are below their 200 days moving average, even Reliance and Tata Motors kind of stocks, because the kind of scenario that right now market is having, this is the reason. So let's see, it is well below its 200 days moving average, but see, the profit growth of the company was 44% CAGR over the last 5 years, and it has maintained a proper profit growth, like sales are increasing and operating profit is also increasing. Now see, according to reports, the luxury segment in India is increasing, so that is definitely going to benefit Ethos in a long term. So it is a halal stock to invest as well, so that's why I chose Ethos. Now the last stock here is Dream Folks. See, both these companies are small, very small companies. You can see the market cap is almost on the boundary of mid cap and small cap, 6,500. Now Dream Folk Services, the market cap is just 2,000 crore. But see, the point over here is it is also well below the 200 days moving average, but the profit is very much good for this company. And see, this company facilitate access to airport related services. So what I think is, this segment, because more and more airports are going to construct in India, the quarterly results of the company is also good. And as we can see, the privatization is going on, and I got to know about this company when I received a card from this company. They gives us like, the people from IIT, they give a special kind of card with ICICI Bank. So I received this card, but I was not knowing till then. So then I got to know about this company. So Dream Folks is going, definitely going to get benefited after the privatization and whatever new airports are coming in India. So these were the stock picks, 5 stock picks for my risky portfolio, because the most of the money is allotted into the mid cap. You can see other as well. If you want, I can attach this sheet. So if you like this video, just share it.
So this was all about my stock picks for January 2025. If you want a video on solar halal stocks in India, just comment solar. So I will make a video on solar halal stocks as well. Thank you so much. Allah.